Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode, we're joined by Clare Gambardella, Chief Customer Officer at Zopa Bank. Clare, welcome to the show.
Thank you so much. Thanks for having me.
Excellent. It's great to have you here. And just to get started, we'd like to quickly let us know a bit more about yourself then and Zopa Bank.
I am the Chief Customer Officer, as you said, and I look after a few areas at Zopa. So marketing, brand and comms, customer growth and life cycle, which is kind of how customers experience us once they're in the Zopa ecosystem, and how they move through channels like our app and our website, and also product design. So it's a really interesting role. I have been here around 6 years, and before that, my experience was actually outside of FinTech in a mixture of FMCG, strategy consulting, and health and leisure. So first time in the industry and very much enjoying it so far. Zopa is a bank. We started off as a peer-to-peer lending business and got our banking license in 2020. We specialise in lending and saving products and are on the cusp of adding plenty more products in there as well. We serve around 1.4 million customers in the UK. So that's who we are and the core of what we do today.
Excellent. Sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. On the show this week, we'll be taking a look at how Zopa has looked to approach its growth strategy amid the constantly evolving digital banking landscape in the UK. We'll discuss how consumer attitudes and demands have shifted in recent years amid a challenging economic environment and the arrival of new technologies, and what UK customers are currently looking for from their banking providers. And we'll also dive into how to navigate the challenges of attracting and retaining customers in an increasingly competitive banking market at a time when account switching numbers have been on the rise. That's all to come shortly, but as always, we'll open with our news and numbers segment. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Clare, what have you brought along for us today?
I have brought along the drop in inflation to 1.7%, which was a story running on the BBC today. I brought it along because, firstly, it's very promising news for consumers, hopefully, who have been battling with high inflation for some while now and have obviously been hit by the cost of living crisis. I think this is an indicator that we should be cautiously optimistic. There obviously might be lots more to come in the autumn budget, but this feels like a move in the right direction. It's also really dear to our heart at Zopa because one of the things that we have been doing for some time is co-founding the FinTech Pledge, which aims to improve financial resilience for consumers through the cost of living crisis and beyond. So it's great to see things moving in the right direction. I'll talk a bit more about the pledge later, but that's why I brought this story along today.
Excellent. Sounds great. And yeah, I did have the pledge down as something I wanted to ask about, actually. So this seems like a good time to dive into some of the details of that now. Can you tell us a little bit more about the goals of the pledge then? And I saw that to mark its second anniversary is where you recently released an impact report detailing its achievements to date. What were some of the key stats to come from that?
When we founded the pledge back in 2022, we obviously had seen consumers coming out of COVID, the beginnings of the cost of living crisis, and there were some quite alarming stats being reported at that point, such as the fact that 25% of the UK population had low levels of financial resilience, which was defined as being unable to withstand a financial shock of an unexpected payment. And it really felt like this is something that the fintech industry was well placed to help to tackle. So we joined together with ClearScore to launch the pledge, and our aim was to drive 25 million consumer actions by 2025 that would contribute to better financial resilience. And that was across 5 areas: making customer savings work harder, improving credit scores, managing and consolidating debt, lowering bills and household outgoings, and determining whether consumers were entitled to benefits and financial aid that they weren't claiming. As you mentioned, we're 2 years into that, and actually we've delivered 18 million consumer actions, which is brilliant. So we're well on our way to delivering the 25 by 2025. We have also added 57 members to the pledge, and that is across both industry partners, enablers, charities. So this is a really broad church of businesses and charities coming together to support this goal. And that has also enabled us to move into helping customers to better understand their finances and improve financial literacy through both social media content. We do a bite-sized TikTok series, which has had around 6 million views, and also more one-to-one interventions through partners like the Money Charity. So there's plenty in there. If people are interested, I would urge them to go to www.pledge2025.org to check out the full report.
Excellent. Sounds great. And I guess, as you mentioned, we're 2 years into it now. What's next for the pledge then as we head into 2025?
I think firstly, obviously, making sure that we achieve the remainder of our goals, but actually ongoing, what we're really interested in is some of the partnerships amongst fintechs and partners that have come out of the pledge. This has been actually a really ripe format for collaboration in favour of consumers. And so we are thinking actively about how that cross-industry coalition can go on beyond 2025 and hopefully deliver some better outcomes for customers, even if it's the case that the pledge itself is maybe not as necessary. And I really hope it isn't in the years beyond 2025. How can the industry find new consumer-facing challenges to tackle and have a positive contribution? Because I think a big part of the power of the pledge has been companies not working in silos, but rather having those collaborative conversations about how they can join forces to make the whole bigger than the sum of the parts.
Sounds great. And just a final point on this. Obviously, interest rates are obviously tied quite closely to inflation levels as well. And where do you see the interest rates going from here now? Is there a general consensus that we'll have some cuts on the horizon?
I think that there's lots of different views about where that's going to go. I think that one of the things that high interest rates has done is benefit consumers who are able to save. And we've definitely seen people making the most of that. Savings rates have grown very strongly because it's become more attractive to do so. But obviously, there's lots of other downsides to that as well. So we'll have to wait and see.
The UK has embraced digital banking. There's a lot of players out there vying for market share now at the moment. How have you looked to approach your digital strategy then at Zopa to stand out from the crowd?
We really consolidate our strategy around two core pillars. One is value and delivering value to our customers, and the second is ease and control. So making things as simple and as transparent for customers as we can so that they feel confident that they're controlling their money in the way that they want. You might ask, well, how is that different? And I think really our strategy is different in a couple of ways. The first one is that because we come from a peer-to-peer heritage, we were grounded in 19 years of lending experience at the point where we became a bank. And so we really started in building out lending products and saving products and have then kind of built outwards from there. The choice to do that was not only because of our expertise, but also because those products actually make a really significant impact on consumers' financial resilience, the ability to save and have a buffer if things are more difficult, and the ability to access credit at good value rates are really key to consumers achieving goals and moving forward. So that was very important for us. It also enabled us to have a sustainable business model, which has meant that we've achieved profitability in one of the shortest trajectories amongst the neobanks. We became profitable last year. And that's been very important for us in terms of building a business which is resilient and sustainable for the longer term. I think that's different to many of the other neobanks who started from a current account base and grew more on a customer numbers basis, at least at the beginning. So that's a really notable difference in strategy. We are now at a point where we want to add more products and meet more of our customers' needs. So there will be plenty more to come. But that real focus on lending and saving was definitely a differentiator for us. I think the second is really thinking about the architecture of our products to deliver value to customers rather than just look at experience. And the fact that we own end-to-end our lending products, for example, has been really helpful in that, and our savings products, because we can really think about the architecture of them to make sure that they work both for us as a business and for customers.
Sounds great. And obviously, we touched on at the start of the show, just the tough economic climate the last few years. Alongside that, there's a rapid rate of technological change as well. How have customer expectations then, amidst all that, of their financial institutions then evolved then in recent years?
I think in two ways. The first is obviously technology is moving really quickly across lots and lots of different sectors. And if anything, I think the pandemic sped up adoption of online amongst certain groups of the population or in certain segments. So I definitely think that consumers' expectations around ease, speed, and effortlessness have increased, and they expect that from their banking as well. They don't expect to have to go through arduous processes, difficult hoops jumping to get to what they want. So that's the first one. I think the second is value. When we've talked about the economic climate, people have become much more focused on their day-to-day finances and keen to make sure that they're accessing the maximum amount of value that they can. And that has been hard in the incumbent banks often because there is a lack of transparency. Sometimes the business models aren't actually aligned to delivering more value for the customer. And so fintechs, I think, have kind of stepped into that gap. A good example would be Zopa savings account in general delivers around 3 times the interest rates of high street banks. Because we're set up differently, we can afford to pass through that benefit to our customers. And so examples like that, where people can see that they're tangibly getting more, has led to a shift towards digital banks. And I think now around 60% of UK consumers are using a form of mobile banking, and increasingly more and more adding digital banks or neobanks to their repertoire.
Excellent. Yeah, I mean, do you think being a digital-only bank as well, not having that legacy infrastructure then allows you to adapt more quickly to the shifting demands of customers?
Yeah, absolutely. I mean, I think, first of all, the fact that our technology, we use a mix of proprietary technology, cloud, and also integration with a wide range of partners. And that is really valuable to us, firstly, in terms of delivering innovation quickly, and also, secondly, giving us flexibility and control over our products so that we can do things differently when we choose to. We can react faster, and it gives us a very clear competitive advantage also in terms of the economics of our business. We don't have that branch infrastructure. We don't have the complexity that some of the big banks have. And that does allow us to make different choices about how we pass value back to our customers. An example would be that we have a much lower cost to income ratio, and that's improving all the time, from 45% to around 38% in 2023. So by being able to take costs out of our business, we can pass that value back to consumers and fund innovation. So that is really important for us.
Excellent. Yeah. And I mean, obviously you mentioned that the savings account there. So what are UK customers particularly looking for, do you think, from their banks at the moment when it comes to the products and services on offer, and what trends have you been seeing there?
I think that it does come back to those points around simplicity and value. And they sound basic, but they're actually very hard to find in one place. And I think what we've seen, therefore, is that consumers have become much more pick and mix in their approach to products. They're much more multi-banked because they're having to go across different providers to find the right offer for them. I think around 40% of UK consumers now have multiple bank accounts, and over 20% have more than 2 credit cards in some of the research that we looked at recently. So you can see that customers are kind of figuring out that they need to find the right selection for them. But that in itself can actually add some complexity. So it's that real trade-off between, well, how many accounts do I want? How many relationships do I want? Versus how much value do I need to access? So I think there's a real opportunity there to enable customers to access value and ease at the same time. I think another big trend that we're seeing is the increase in buy now, pay later and point of sale lending. That's obviously made it very easy for people to access credit at the point of sale. It's been a huge, huge increase in the UK in the role that those types of financing play. So that's another trend that we're really seeing. I think that has a lot of positives, but it has also brought a lot of scrutiny around how we help customers to manage that responsibly, to have transparency of how much money they're borrowing and what they need to repay, and ensuring that borrowing happens in a responsible fashion. So lots of different trends there that we're seeing, but very much around accessing value and ease.
Yeah, and I guess building on your first point there, I mean, there has been a surge in current account switching as well recently from consumers. People who switch often citing new joiner incentives, better savings rates, as we discussed, as reasons for switching. Do you think people now are more willing to change their bank and seek better deals elsewhere now? And how have you looked to tap into that, I guess, to kind of bring customers into Zopa as well?
Yeah, so I mean, I think people are much more aware of what they are and aren't getting from their bank, and are more open to moving if they feel that their needs aren't being met. I do think that in some cases that's about switching. In some, as I said before, I think it's about adding products. So actually having products that sit alongside their core bank, because it is quite hard to let go sometimes of that core kind of trusting incumbent relationship, even if it's not necessarily serving you that well. We've definitely seen across multiple product sets that people are looking to add in products or switch products to get better deals. We saw, for example, our savings deposits increase from 4 to 5 billion across 4 months this year. And that was really people looking for stronger interest rates and much more value on their savings. So people are willing to switch. They are looking for more. And I think for us, it's really making people aware of that there are better options out there and actually getting them to try Zopa, getting them to experience the difference and then make up their minds for themselves.
Yeah, and I guess, again, kind of building on what you just mentioned there, I mean, it's been said that a lot of consumers use digital banks almost as like a spending pot, as you mentioned, alongside that, the main accounts with the high street banks. Do you think as time goes on, I mean, do you think this is still the case now? Do you think as time goes on, it's going to change and people are actually going to start using digital banks more as their core bank, I guess, to put it that way?
I do think at the moment, from the data we've seen, that customers often use digital or neobanks alongside their core banks, and they use them in a variety of ways, whether that's to access savings value, whether it's to move certain pots of money into a different place so that they can spend them or treat them differently. There's lots of ways that people manage their finances like that. I think that the first thing I would say is that we have talked about our journey to launch a current account. We are on that journey now. I think that we acknowledge that on day one, maybe even beyond that, we will be part of an ecosystem for people to manage their finances. I think it's unrealistic to expect people to switch on day one to a new provider. And so actually one of the things we focused on in our app is how do we make it easier for people to have multiple accounts and manage them all in one place. So we use open banking to connect external accounts into our app and provide insight and information about the way that customers are spending or transacting across those. We also make it easy for people to make payments across different accounts within our app. So actually, I think the first step is acknowledging that ecosystem exists and that it does have value for people. And how do you bring that together in a way that's easier for them to manage rather than hopping and jumping across 5 apps, for example? I think then the next step on from there, in our mind, is to make our current account so great that actually when someone experiences it, they want to do more with it. And you almost earn the right over time to become their primary account, not because you're telling them that's what you want to be, but actually because they realize it's so much easier, they're getting more value. All of those good things just make that a very sensible transition. So I really think it's about sort of earning the right to own that relationship in a way that I think the incumbent banks kind of aren't, because they feel maybe like they don't need to anymore. But I'm not sure that there's an enormous amount of benefit being given on a lot of the incumbent bank accounts. And that's for people to kind of compare and contrast as they use something like a Zopa versus their existing provider.
Yeah, and I mean, obviously, with how easy it is to switch these days, how easy it is to open accounts with new providers these days, how much of a challenge is that then in terms of retaining the customers that you get? And how do you look to keep them engaged, I guess, once they're there?
I mean, we obviously aren't in current accounts at the moment, so I can't talk too much about that dynamic. But what I can say is that because of the fact that we deliver such strong customer experience, our net promoter score is in the 70s, which is really strong for the category and actually many categories beyond this. So customers really love what we do, and that reflects in our retention. So around 70% of our app users stay more than 3 years in the app. I would say around 36%, it goes up and down a little bit, of borrowers reborrow from us directly. If they've had a loan, they want to come back for another one at some point, they come to us versus going via aggregator. And we have a very strong sense of stickiness in our savings book without being consistently top of table. But the reason for that is, in my mind, really 4 things. Great experience. So how do we make sure that our customer journey is very simple, our customer service is great, all of those things. The second is meeting a wider set of needs. So it's obviously easier, the more products that we have, for customers to engage with us and stay with us for longer. passing through value sustainably. So, I mean, that point I made around the savings account, we don't up and down our rate and get people in on a teaser rate and then drop it back down. I think we've only moved our rate down once in the years since we've launched our savings book. So actually, we try very hard to continue to pass value through to customers. And that sort of consistency, that sustainable value is actually worth a lot more to some people than getting an offer rate to come in, which they know will instantly drop down. So a real focus on sustainability, not on gimmicks, and also focusing on features which help customers with their ongoing needs. So we have a feature called Borrowing Power, for example, which allows customers to understand how their credit score links to the cost of their borrowing at Zopa and take action to increase either their eligibility or improve the cost of their loan. So these are very material tools that link specific actions to the cost of credit. Another one, as I said, would be the kind of Know Your Money insight tool that we have, which allows people to link accounts and get some insight on their spending in one place. So these are great, I think, examples of how using technology and data to really provide value to customers over and above just the direct monetary product is really important for retention.
Excellent. Yeah. And you mentioned earlier in the show as well that Zopa recorded a profit over 2023. What are the challenges for a digital bank then trying to scale, especially in the tough economic climate that we've mentioned already? And in what ways have you looked to adapt to ensure your continued growth?
I think just thinking about some of the challenges in the environment, the first being access to talent. It's been a very competitive market in fintech, and I think a lot of companies over the last few years have been competing for the best talent. We at Zopa have a very strong focus also on diversity, so finding diverse talent, which helps to improve our business. And that means that we have gone down the road of partnerships. So, for example, we have a partnership with Code First Girls, who offer digital nano degrees so that we can bring them into our business as graduates and then train those people in the developer path. We also have around 50% of our senior roles held by women and a very active women in business community. So these types of initiatives, I think, really have helped us to think about talent pools differently and access talent pools differently. I think the second thing that's been a challenge in the market has been access to investment. And I think that we've seen actually a focus on more sustainable business models, investors looking for businesses which have a strong focus on profit, which has been an ongoing focus for us in a way that possibly wasn't so important in the market a few years ago. And as a result, we have delivered a couple of fundraisers across the last couple of years, which have helped us to reinvest in the business and grow. And then I think that third one is continuing to scale. I think that for us, making sure that we not only scale our existing products, but also meet a broader set of consumer needs has been really important. And that's why we've been looking beyond just our core products and thinking about how we can also attract new customers, but also meet a wider range of existing customer needs through our app and through taking the experience that we have and reapplying that in new segments.
Sounds great. So I guess what's next for Zopa in general then in terms of the near-term future? Is there anything else that you've got in the pipeline that you can tell us about now?
Yeah, I mean, so we already talked a little bit or touched on the fact that we want to launch current account. There'll be more news on that to come soon, but that's a big focus for us. And also thinking about additional exciting products, which I can't talk too much about, but product development has been a big focus. I think that this year we again anticipate double-digit revenue and customer growth. So to that point around scaling, it's very important for us to continue to grow and continue to attract consumers to the business. It's also the case that strong business performance opens our way not only to continue to expand, but also to consider inorganic opportunities. So there's lots of exciting stuff on the horizon for Zopa, but really, really keen to bring the brand and bring the business to even more customers in the next year.
Thanks again, Claire, for chatting with us today. To close out the podcast, we have on our infamous FinTech jails. This is where we ask for a term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
Well, we were actually talking in the team about whether we should throw AI in there just because everybody's talking about it at the moment, but it felt quite futile, given the fact that I think that there's going to be a lot more conversations to come. So I actually chose one that's a pet peeve of mine, which is customer centricity. Not because I don't love the concept of customer centricity. I think being a chief customer officer, that would be a little bit strange. But I feel like this is one that's really bandied around without businesses really committing to what it means. And it's kind of come to mean everything from we do some customer listening to we're quite customer friendly to we have made things a bit better for customers. Whereas I think the kind of core of customer centricity, which was putting the customer at the heart of the decision making, making trade-offs that sometimes are uncomfortable to actually meet the customer's needs, has really got lost as it's become just this sort of generic term for customer insight and customer understanding. And so I kind of feel like a lot of businesses that use this don't want to make the hard choices to be truly customer centric, but kind of want to use it as a buzzword. And one of the reasons I was very much attracted to Zopa when I thought about joining 6 years ago was actually that there were really great examples of where the business was truly customer centric, making decisions that weren't necessarily comfortable in order to deliver more back to the customer. And for me, that's sort of the bar that we should be always aspiring to, rather than a somewhat watered down version of the term. So that would be in my fintech jail, and actually my industry jail, my marketing jail.
Yeah, no, excellent. This was actually thrown in the jail back in season 2 and then released in season 3. So it is a repeat offender.
Okay,
so
wow, I should have done my homework.
No. It's clearly didn't adhere to the terms of its bail too well because it's going straight back in, it looks like. But no, I think you've made a really great argument. I think when it was initially thrown in, the argument was everything should be customer centric anyway. Any company that provides products and services should, at its core, be customer centric anyway. So then maybe it just becomes a superfluous thing to say as well. But I think the argument you've made there is really good, like I say. So I'm more than happy to throw a customer centric straight back in the jail again. We'll have to wait and see, I guess, whether someone advocates to break it back out again further down the line. But Claire, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you for having me.
Well, that's all we have time for this week. Thanks, of course, to Claire for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.